Hey everyone, John, Gina, and Ingy here of the John Christopher Group. I hope you're staying safe and well out there. I know I am with my mask. My mom made me this one, especially for me, with Dodgers logo. Go Dodgers! Missing baseball right now. And my barber, as I was just mentioning to Gina and Ingy, things we take for granted during this time. Just wanted to put out a quick video as I've been getting a lot of feedback from buyers who are kind of on the fence with where we're at with the market in regards to that. They think that we're going to hit this big recession and prices are going to drop dramatically like they did in 2008. I don't know if a lot of you remember, but in 2008, we had a huge real estate crash. Property values within a year depreciated 20, 30%, even upwards of that in some areas. And it created a lot of economic turmoil, and it also created a lot of opportunity for savvy investors who had the means to purchase during that time. But I just wanted to touch base a little bit about what's going to be different this time around. We're not going to see that huge depreciation like we did in 2008, mostly due to three big reasons that were really fueling the fire then. First of all, loans. They were giving loans to people who had no business qualifying for a home mortgage. If you could breathe fog on a mirror, you were going to get a home loan to purchase a property. So they were not regulated really well. They were handed out to just about anyone. People with bad credit, a low income, very minimal means to purchase a property. And as a result, when there was a little bit of adversity, they were affected quite dramatically. Secondly, the housing inventory at the time was extremely overbuilt. I remember at the time driving around, and there was just development after development everywhere you turned, and they were overvalued. These developers were sticking prices on these new homes that were just absolutely over the top, and people were coming and buying these properties because they just got the qualification from the loan that they shouldn't have. So you had people with bad loans in their back pocket going out to buy properties that were grossly overvalued. And third, these people who were buying these properties were already highly indebted. They already had high debts on their credit cards, student loans, etc. So it was just a recipe for disaster. This time around, the lending industry is much more scrutinized. You have to go through a lot of red tape and jump through some hoops to get a loan these days, which is a good thing because we want people that are well qualified buying properties, not people that are just getting by. Secondly, our housing inventory has been diminished over the past few years. It's been severely underbuilt. We've lost a lot of properties to rental units here in Los Angeles, particularly. And as a result, the inventory of housing available to purchase has subsided quite a bit in the past few years. So that's the second reason why we're not going to see that huge overnight depreciation. And lastly, this time around, people aren't carrying as much debt. They delevered over the past 10 years or so. A lot of equity has been built. People have been gainfully employed, obviously not up till now, but that's going to change. This is just a hiccup a bump in the road, we should say. But once this passes, things will normalize. Yes, we're going to lose a lot of the buyer pool. Properties are going to come down a little bit in price, but don't anticipate that huge 20, 30, 40% like we did in 2008 if that's what you're waiting to see happen. And I'll throw it over to Gina and Ingy to talk about a little bit of some statistics and some of the areas that they work. So I'll start with Gina since you're on that side of the computer.
Yeah, so in Los Feliz, which is my main area of work in Los Angeles, I looked at the stats between 2019, between March 15th through April 15th, so just that month in 2019 compared to 2020, so this year. So pretty much right when like quarantining became official and that really started to take an effect across like California. And there's really just a barely tiny decrease in the average sales price. So it went from 2,032,000 last year to 1,943,000 this year. And the number of solds is the same exact. It was 14 last year, 14 this year. And we see that the number of canceled went up a tiny bit too. So there was 3 canceled last year at that time for single family homes and 5 canceled this year. So we're just like seeing the tiniest effect right now. And of course, things are just taking effect. There's definitely some sort of a lag between when things are shown in the market and when things happen. But we can see that there's not a really big difference, at least so far. So that's hopeful.
Yeah, that's some good news. There's some higher homes up there, so maybe people are still clamoring to take advantage of the low rates on those higher price points. And an area like Los Feliz sometimes has a little bit more protection than a lot of other neighborhoods, just because it's such a high value area and it's a small area that a lot of people want to be in because it's such a beautiful neighborhood. Some great homes up there. In fact, I have a listing right now, 2420 Glendower Avenue. Definitely check that out. I'll put a link below. I'll have a 3D tour up in the next day or so. So if you're ever interested in Los Feliz, Gina's definitely the specialist there. How's it looking over in Hollywood, Angie?
So in Hollywood, I see the same, a little downward slope in prices as expected due to this pandemic. And more days on market. I wanted to touch base on that. It's also because of this, what we are going through right now. People are hesitant to make a move, apparently, and so that makes days on market go a little bit higher. But the price-wise, as we expect for buyers, it's going to be an advantage for buyers because with the low interest rates and the price going down, it's going to be a great time to buy for them. So like Gina said, I pulled the statistics up from March 2019 to April, and I see actually a lot more inventory, almost triple the size of last year. So that means there's the production is not stopping. There's still some supply, and then with the low prices and low interest rates, there's going to be more demand in the future. So that means there's still things going on. It's not totally dead.
Yeah, the world hasn't come to a total standstill. People still want to sell their properties, but if you're a buyer right now, you're in a really good position because, as we've been talking about, the amount of buyers that are out there looking has diminished quite a bit, probably more than half. A lot of people who are in escrow backed out. People are canceling contracts. Some listings are pulling off a market until the dust settles from all this. But if you're in a position to write an offer and close on a property, you have some leverage. You have some bargaining power right now. It's a catch-22. I get a lot of people are saying, hey, wait a second, we're heading into a recession. Prices are going to drop. But they're not going to drop that much. A lot of people have that pie in the sky idea like, hey, I'm going to get this steal in the next year or so, and people are forced to give their house away. That's not going to be the case, just as I touched upon in the first few minutes in this video. We are going to see a little dip in pricing, but it's not going to be a huge dip, and it won't justify not jumping in sooner than later and start chipping away at that 30-year mortgage payment with the lowest possible interest rate you can. I pulled a couple of stats real quick. I'll end it shortly here, but in 90065 in 2019, this time of year from March 15th through April 15th, this pandemic month we've been dealing with, there were 28 homes pending. This time this year, 16, almost half. We've cut things in half. Last year, this time, 25 homes sold in that period. This year time, 13. So we're seeing a downward trend. There's less buyers out there, which means the buyers who are looking have a lot more leverage with the sellers who are still on market. So keep that in mind. Don't lose hope. We're here to help your home ownership goals in any way. If you're looking to buy, sell, lease, we're happy to advise you. Feel free to pick our brains anytime. I know it's a weird time and there's a lot of questions in this market, but we're here to answer them anytime. So please stay safe out there. Don't forget to wear your mask. It's law now in California. Don't go outside without it. And really just, I hope you and your family are doing well. I know it's a really trying time for everyone, and just hang in there. I know it's really tough, but we're in this all together. So take care, everyone. Hopefully we'll have a video out for you in the next few days. And don't forget to follow us at John Christopher Group on YouTube. Take care. Bye.
Bye.